Good morning. Welcome to GrainTV, Tuesday, October 18th. We had a weak overnight session, Cody. Corn and wheat off 9 cents, beans off 22. What are the drivers of last night's trade?
Well, there's two drivers really. China came out and their GDP was at 9.1% growth, so that's not so good considering analyst expectations were right around 9.3. I think the other major factor here is the stronger dollar. You have Moody's coming out and warning France and saying that you're at risk of losing your AAA rating. That's going to actually affect the dollar. That's going to put a bid under the dollar. If you take a look at the dollar chart, you can also see technically it's going to be stronger here. It had a significant sell-off, came back to a support level right around this blue line at 77. We also had a 50-day moving average right at this point here, and now we're moving forward. I think that the grains are going to be swimming upstream here.
Right. Are we going to test those highs up there on the dollar at around 80? Or
I think that the structure is in place for the dollar to continue getting stronger here. I think the Eurozone is weak. I think that their economy is weaker, and they're going to be at risk of lowering interest rates potentially later on. They were such inflation hawks over there earlier. I think it's going to be they're going to try and do everything they can to strengthen that economy after that crisis has done so much for it.
Hey, strong dollar can't do anything beneficial to help our weak export market here on the domestic front. Turning more locally, the U.S. harvest continues to go very quickly. Excellent weather has led us to above average conditions in terms of harvest progress. We're at 47% for the corn market versus 41% normally cut this time of year. Beans around 69% versus 61 normal. It's just been awesome weather in pretty much all of the key areas of cutting grain. And what does it look like as we move forward into next week, Cody?
Yeah, let's take a look at the weather forecast. Really, it's dry, but it's cold. There are significant threats for freeze around the Great Lakes region. I think that's going to put a little bit of stress on the Ohio crop, considering they're only 60% mature versus 90% at this time normally. So it's going to be cold. We have some freeze threats, and I'm a little concerned about that Ohio.
Crop. So that could take a little more off of that crop that's already been having trouble all year, from late planting to bad development. Everything about that Ohio crop has been pretty miserable.
Yeah.
Hey, we'll be back in a few minutes and talk about the markets as they open. Welcome back. We're here for the trading of the opening session this morning. Cody, what are we seeing on the board?
Yeah, we're seeing the markets open about where they closed in the overnights. We're down 6 for corn, so just up slightly. Beans up 2 cents at minus 20, and wheat minus 8, so it's trading at 6.16.
Yeah.
Not a whole lot of action going on. I know Ben Bernanke is going to be speaking a little bit later today. I'm not entirely sure some major moves are going to be happening. I think we're kind of in a little bit of a consolidation after a pretty nice move in the last couple weeks.
Yeah. So what are you thinking about a farmer's play right now? We've had a big sell-off. We're starting to recover a little bit. What are your strategies for farmers right now, Cody?
I think we're going to be a little bit range bound. I'm not a lover of beans. I know that we blogged on AgWeb on the Grain Hedge blog last week that technically beans is going to run into some serious resistance. I think there's a number of things going against it. You have China revising their GDP rate down. They're not doing very well in terms of sales. Beans aren't making the sales that we normally do. We got competition in the South. It's just not looking too good for beans. It had a nice rally last week. I think that should be sold into. There's some significant resistance up there, around $13. So, but as for corn, I think we're going to be range bound. I think we're going to be popping around. If we take a look at the daily chart, I think we're going to be popping around. We might jump up to around 675 ish. But I think between 675, that's probably the range that we're going to be trading here for a little bit until we have a better idea of what production really is.
Right. So from a farmer's standpoint, you'd be looking at that 675 as a key area to maybe initiate some more sales somewhere in that range.
Yeah, it's one of those things that it's a rough area.
Yeah.
This is such a volatile market. You can get these spikes intraday that you don't necessarily close.
Right.
I think that there's a lot of congestion up here where we traded in a range throughout throughout the summer.
Yeah.
And I think that'll offer resistance if we get back up to those levels.
Sure.
So I think those are opportunities to sell some grain, get some grain priced, not necessarily opportunity. It shouldn't be viewed as the next stage of the massive bull rally.
One thing I'm looking at, Cody, is not only the range bound that you're talking about right now, but I also think we're in a definitive bear market right now. The sentiment across most of the commodities that we track and all the other livestock and softs are negative. They're bearish right now, and I think as a farmer you have to be cognizant of that the market has now changed from a bullish sentiment to a bearish sentiment, and you need to start thinking more long term. Look out to December 12, December 13. Those contracts are still trading lofty levels, in the $6 range. D's 12 is 594.5. D's 13 is 577. I'm not saying do those today, but I think I want to keep my eyes on those. $6 is a nice round number. I think if you could lock those in, a small chunk of your crop ought to be forward committed already because of the negative sentiment that is starting to shift into the grains.
Yeah, that's definitely a fair perspective to have. Why don't we switch back here, take a look at soybean basis. This is one thing, I know I've talked a little bit about soybeans, but there is some definitely bearish factors out there. We've come off a huge amount from that rally that we saw breaking over 14. Now we're sitting down here at what was it, 12? Let's see here, 12.37. So farmers are not looking at these prices and saying, "Yeah, I really want to be selling."
Right. They're not selling them off the combine real aggressively, are they?
Exactly. And I really think that this is a great map to display that. We have an average basis from the beginning of October up 13 cents.
So in the last 2 weeks, we're up 13 cents a bushel.
Yeah.
Contrarian to the harvest pressure that's normal this time of year.
Absolutely. Even the areas in red are actually up.
Yeah.
But the areas in green are up substantially.
Yeah.
Now that's 18 cents over, or greater than 18 cents over that average.
Yeah.
So, this whole area going down the river, strengthening that.
Yeah, we've seen barge rates actually back off about 6 cents in the last week. Again, contrarian to what's going on. Some of that obviously is a smaller crop, but more importantly, I think it's the weaker exports. And so barge rates have been backing off counter-seasonal, and so that's helping basis as well as what you mentioned, the lack of farmers selling at this point in time of the year.
Yeah, and we've seen very similar type things in corn, not necessarily the river effect, but just the fact that we're up 6 cents in October. We're right in harvest. We're still seeing a basis increase. I think this price snap during harvest is causing a lot of producers to not be so willing to go out there and price the grain right off the combine. They're holding it back, and as a result, we see 6 cents increase across the U.S.
Right. One thing we've been talking about for the last couple of months is the strength in soybean basis that we were looking for and sort of the flatness that we expected in corn, and that's sort of showing up right now. The other thing we're seeing is the fact that forward carry in the corn market has just taken a dive. If we go back 2 months, farmers could lock in about a 16-cent appreciation from harvest to January. So if you locked in, carry out to January, you were getting an extra 16 cents over what it was at harvest. Today, that same October to January carry is only 2 cents. The market's not paying you anything for the next 3 to 4 months on average across the U.S. So that's really detrimental to farmers trying to look for forward contracts, as we alluded to a few months ago we thought would happen. So it's going to be an interesting year. Continue to follow us on GrainTV. Call us anytime, 877-GRAIN07. We'll be happy to talk to you about your marketing strategies. Have a good week, and we'll see you on Thursday.